Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. Actually, we're looking at an astronomical 39.72% gain on Tuesday for the yesterday for the new Delta DTS. Now, of course, that's the Delta DTS with a few newer systems that we've developed. The Delta DTS obviously being for those of you who have followed us for years, probably about a 5-year-old portfolio. And of course, we develop 2 to 4 new trading models per year. So we added a few newer trading models to the Delta DTS, and lo and behold, look at the impressive gains. Nevertheless, we're going to take a quick look at the market. Excuse me, the mini S&P 500 futures contract. Just simply a dead market is the case today as we continue to bounce around the resistance of 1300. It has been certainly eventful to say the least, with the impressive swings, most notably yesterday. Had a huge move to the upside, a gap followed by a beautiful trend and a close near the upper ends of the trading range, the upper echelon of the trading range. But how do we know that the move, certainly in the morning around here, was going to continue? Well, just look at our intraday dynamics here. These are proprietary indicators that we use to gauge where the market's likely to go, and certainly green means bullish and red means bearish. So we're getting some negative divergences today, but really, given the price action, we're really not expecting on this Wednesday, the second day of February 2011, really not expecting too much price action, as 1300 is a fairly significant level to contend with, and certainly we've been looking to add on a discretionary basis some short side exposure. Having said that, meanwhile, our systems have been tearing it up over the last few days. So we're going to get to look at that in a second. As we've mentioned, most often times is the case, the 80-20 rule can be inducted. The 90-10 arguably could be the case, as 90% of our profits are made on just 10% of the trading days. Essentially what that means is, we kind of churn around for, let's say, 225 of the trading days out of the year, and the other 25, 10% or 50 could be or are essentially the days that we make all of our money, and more than make up for any kind of small losses that we take over the course of the rest of the year. That's why it's very important to certainly be fully automated and not have to endure monitoring your computer screen to take the trades, or in a trading room sitting waiting for the trades to the right trade setups to occur, or having the trades delivered to either to you to call your broker or what have you. That's why full automation is so key. So important that you can just simply let the systems run, and our system certainly will run in your account invariably with full automation, with broker oversight and management, of course, to ensure everything runs smoothly. You don't have to do a thing. All you have to do is sign up, have an account open, or open an account. Easy online process, 5 to 10 minutes, and you can be up and going. The systems are just hooked up essentially to your account and run on separate servers, and with near instant execution. So we'll get to that in a second, but as we stand right now, certainly not really going to issue any free informational day trades on the ES today, because as you can see, the market is has flatlined, as it were, as it digests and consolidates the monstrous gains that we did see on the day prior, that of course being Tuesday. If we actually look back, scroll back a little bit, on Monday, Friday was certainly a bearish day. As you can see, full all-out bearishness was the case on Friday. Just really clear-cut indications of where the market's likely to head. Full all-out bearishness was the case right here, and a continuation move to the downside on the ES right here. The converse was the case on Friday, as we saw full bullishness. With the market really wasn't able to make any headway, but that certainly was a precursor. That, along with the full bullishness on the early session yesterday, really suggested the market was going to move higher, which it of course did. And right now we're again just kind of waxing and waning in a very narrow range from 1300 to 1305, with certainly a bearish bias on the market. So we're going to go ahead and just minimize that, and then we'll take a look at As mentioned, our portfolios have been just astronomical over the last few days. Here's one case in point: a beautiful R2K day trader 60, beautiful $1,000 gain per contract was the case yesterday, and on I guess this was Thursday. Take that back, it was Friday, and as you can see, a beautiful $1,500 gain per contract, really just getting short right before the big move to the downside and catching almost the whole of the move, going right back to the upside was the case the 2 days later, and another beautiful gain for the R2K Day Trader 60. This venerable swing system 5.0 continues to hold the long position that it bought around 11,625. We're of course now at 12,000 in the Dow for a beautiful gain there of several hundred points. But we're actually looking for there's a MILTF. Here we go. So quick look at the daily chart of the market. This is the S&P 500 cash index, and as you can see, we've had some pretty errant moves. An ET sell signal was the case, albeit high level in nature, suggesting that it could be a good buy setup over the last about 2 weeks ago. Actually got another ET sell signal, but that is completely again high level in nature, suggesting that if it's reversed, it can be a good buy setup, and certainly that was the case as it was reversed back above 12.95 and got a quick blast at 13.05. That's kind of where we're standing. We're actually above the recent highs, so the bulls continue to essentially control the market, as you can see. As we've mentioned, it's been 50% from a trend following perspective, all out bullish for quite some time, ever since around the 1,000 mark. Full all out bullish, essentially, albeit a slight hiccup there, but simply another beautiful buying opportunity as a retracement. The momentum has been fully bullish for the most part, but again, momentum indications can really just simply diverge for quite some time until the market actually the price technicals come in line. From a directional movement, again, I should actually read short-term bearish, obviously, although we do have kind of a hook here suggesting that we could go back to bullish, so we'll just leave that for now. Back to bullish in terms of directional trend, but the intermediate has kind of waned off. So interesting setup. Again, we expect 1300 to be impressive resistance and look to add some short exposure at least for a ride to 1250, if not further down, but certainly we'll let price be the final arbiter, and all the signs continue to point to bullish on the daily chart. So we're going to go ahead and minimize that. There's our swing system 15.0. Again, another beautiful buy setup. Buys at 71.50 and then close at 13.0225 on today's early session. So there's what did I say, 71? So there's another 30 points or so. A quick $1,500 per contract on our venerable, not venerable, it's only been a swing system 15.0 under 10 years, so can't really call it venerable, but certainly an impressive profit maker is the swing system 15.0. If we look at our venerable Evo, certainly can be labeled as venerable, being that it's about 6-7 years old, and continue to put up monster gains is the case for the Evo. Let's see if we can pull up the performance report. Again, beautiful equity curve. We'll go back over to the swing system 15.0, and we'll click away right there. We'll take a look at its equity curve. It's actually quite impressive as it continues to break out. Look at that beautiful, probably $10,000 in gains since July per contract on the swing model. And as you can see, a little bit of hiccup there, but otherwise a beautiful equity curve on the swing system 15.0. Certainly part of our portfolios is the so I guess that's about it. All right, so we're going to go ahead and look at sorry for the blank screen there. We're going to go ahead and look at some of our stuff, and so right off the bat we noticed that last Friday we on that impressive day where we caught a lot of our portfolios short for the huge moves. As you can see here, the trades right here on the 28th, some of the trades right there, that's just in the S&P, also the Dow, but the triple threat trader HR gained an astonishing 41% on that day. Here we go, right here, 41%. So this was Friday. Matched only with the dual day trader ES, and the venerable MapDT gained 30%. MapDT version 4.0 HR gained 36% for the day. Some astronomical gains that you can put up, and of course, at that time, over the last 45 days, we had already been making money. So if you tack on 41%, you now get 92%. That's the reason we kind of pointed out the Triple Threat Trader HR, blasted it to the #1 spot over the last 45 days in real-time tracking. 92% has been the return for the Triple Threat Trader HR. So really just an impressive portfolio when you can put up 100% gain in just 45 days. The gains are nothing to sneeze at elsewhere, with the MapDT version 4.0 HR 78%. This was as of Friday. And the MapDT, venerable MapDT, our oldest and longest running portfolio, up 67%. Most diversified portfolio, 30% for the Map Black. $30,000 absolute gain, $20,000 absolute gain for the MapDT version 4.0 HR. But what's interesting, this was Friday. So we're actually going to go ahead and look over at $4,100 for a $10,000 Triple Threat Trader HR. We had another monstrous day yesterday, and as you can see, more portfolios up around the 30 some odd percent level, and the Delta DTS, the new Delta DTS, actually, that we touched on a little bit before, 40% was the return, and now we're looking at over the last 10 days. I guess we can't read it from this chart. Delta DTS, so what would that be? 15K, right around here. Something's popping up, not sure what it was. We don't need that. And so 15K should be 70% or so over the last 10 days. We're going to go ahead and, but there's the Delta DTS again, boom, boom, couple of longs right there. We mentioned the Evo and the RG Day Trader 60, and the beautiful gains that portfolio has made. And again, we're getting that little pop up. Sorry about that. There we go. That wasn't very good timing. Looking at the all times over the last 47 days, as you can see, 107 or 113% return for the Triple Threat Trader HR, as we had an enormous day just yesterday. As mentioned, the venerable MapDT 37%, Delta DTS 40%, aforementioned Master 33% for that. So if you look over the last 3 days, and these amazing returns that we've seen in our portfolios, again, the 90-10 rule, arguably 80-20 rule, and simply just astonishing returns our portfolios have put up over the last 10 days. 86%, 85% for the Triple Threat Trader HR, 75%, 73%, 70% for all the, and of course a lot of those are day trade models, and we actually could have made a lot more money because we didn't trade on Fed day, and it actually, figure the one day that the Fed day was just the most beautiful. The dynamics have simply just been so favorable for our trading models lately, and we certainly do expect that to be the case probably for a while, given the U.S. stock market. But there you have, over the last 47 days, 113%. If you're interested in subscribing to any of these portfolios, again, it's full automation. Just simply go to the website, and we'll just refresh that. You just go to the website. You can click on any of the portfolios: the Q Trader, MSA UDT, the Master A, and any of the portfolios, and you can enter promo code video and subscribe to these portfolios, and you'll save an extra 20% on the portfolio. So if you're interested in those, go to the website, chat with support team live, or shoot us an email to admin@MiniAnalyst.com. We hope you enjoyed the video, and we'll see you next time.